Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, May 12th, 2020. I'm giving you a little bit different look today. Yesterday we had the new banner out. Today I'm showing you what my working conditions are like to a certain extent. This is a repurposed playroom above our garage, probably accounts for the strange looking coloration. We used to call it the mango room because we kind of like putting some weird colored paint when the kids were little. But now it's sort of become a mix of home office and somewhat unused workout equipment, as you can see sort of to the side. I'm sort of saying all that because there's not that much compelling to discuss today. Yesterday we saw the sell-off that morphed into a little rally, which ended up being a more or less unchanged day. Today, more or less the same pattern. We saw the futures lower overnight on some bad economic data out of China, a bit of a rally into the morning, and now just sort of meandering around the unchanged line throughout the day. I think a lot of people may be distracted by some of the stuff that's going on outside the market. You've got Dr. Fauci talking to the Senate. You've got some major trials regarding the president versus Congress in the Supreme Court, and for the first time really in history, this year, this COVID situation is allowing people to listen into the Supreme Court. So I suspect that there's a certain amount of both going on right now. We've got a little takeover buzz where you have Uber looking to make a move on Grubhub. As we're taping this now, details are still rather light. It's more discussion or a rumor rather than an actual situation at this point. That's something to keep an eye on. I guess markets like hearing, and it's a good thing when you hear companies trying to take over other companies and invest in their business. It is a sign of confidence, and it is a sign of consolidation in businesses right now that are very difficult to make money in. That's generally a pretty good thing. We'll see what happens when the terms come out to see whether it really is that good or not. In terms of other stuff, it's really just the same old, same old. We got CPI numbers that showed deflation this morning, raising the question which I raised on Yahoo Finance yesterday, and that got retweeted around to a certain extent. Questioning, okay, we're seeing all this Fed liquidity. How much of it is about really fighting deflation? And this morning CPI printed at a negative 0.8, and which met expectations, and the core printed at a negative 0.4. Which exceeded the -2 expectation. And so remember, people don't like inflation, but deflation is far worse. We have a very heavily indebted economy. A lot of companies rely on debt. The takeovers that I would talk about generally involve some sort of debt financing. You've got people who are indebted, you've got companies who are indebted. And as much as basically what happens is deflation, I'm sorry for tripping over my words there. Deflation is very bad for debtors because what it means is you have to pay your debts back in higher real currency terms if the currency deflates. If the currency inflates, you're paying them back in lower real dollar terms, real currency terms. So, that's one of the reasons why, let's say, real estate is considered a hedge against inflation, because typically you borrow the money to buy a piece of property, which is a real asset, and you're using that leverage to be able to afford it. And if there is inflation, the value of the value of the asset appreciates in nominal terms, and the amount that you pay sort of depreciates in nominal terms, and that lets you make some money on that prospect. If you have to pay it back in a currency where people are incentivized to hold the dollars or hold their currency rather than use it in the system or spend it, because prices today will be lower than they are. Prices tomorrow, rather, will be lower than they are today. That's not a very good thing if you have to pay back debts, which are covering assets that are depreciating, or using a currency that is appreciating in real terms. It's not a very good situation. That's what central bankers fear the most. And so as we see the Fed having put all kinds of money in, and one of the pieces of news today was that they are following through on their promise to buy certain bond ETFs, and the question remains, how aggressively are they doing it? Are they doing it more just to be credible because they said they were going to do it, or is there really going to be active participation? But that's why they seem so desperate to be propping up fixed income asset prices and providing liquidity to the fixed income area. Fed doesn't have a ton of tools, and so if your choices are deflation or not deflation, the central bank is going to work very hard to avoid deflation. And I think that's what we're seeing now. That is the right thing for the Fed to do and for world central banks to be doing. But is that a reason to be? Is that a reason to be following them along? We've said this various times. Don't fight the Fed is a really good mantra. Very hard to fight the Fed and win. Doesn't mean you have to play along all the time. And I think that second part is sometimes lost on people. And again, that's why I'm going to be watching the Fed balance sheet very closely and liquidity prospects very closely, because to see if the Fed is kind of done injecting liquidity, the market's got to stand on its own, and it's not clear to me how that's going to do it in the short term. Anyway, we will talk again soon. Take care. Bye-bye.